Good morning, good afternoon, good evening, everybody. Welcome to another session of Launch AMA. Today, I am joined by Ganesh Swami of Covalent HQ. Welcome, Ganesh.
Hey, Sam. Great to be here again.
Awesome. So we have like a long discussion ahead of us, and I'm just looking at the questions here, both on my list and I'm sure questions that the audience is going to answer. So quickly, I'm just going to go over some house rules. Folks, for you that are listening in live right now, if you have questions, please type them into the Q&A session, and then I'll make sure to flag Ganesh to answer as much as we can. Ganesh told me offline that anything's on the table, so feel free to ask him about anything from his favorite food. I'm just kidding. But let's just kind of backstop a little bit, because obviously you and I have known each other a couple of years already. But let's start just at the beginning. Why don't you just tell everybody a little bit about yourself and kind of how you got into tech and specifically entrepreneurship?
Yeah, that's a great place to start. So I'm a physicist by training. I went to engineering school, and I spent the first half of my career in the physical sciences, which is building cancer drugs. And I've always wanted to be an entrepreneur, but I had moved to Canada when I was 19, and I didn't have any connections. I didn't really know how to get started. I've basically read every entrepreneurship book that's come out in the 90s and the early 2000s, and I was just very curious, and I really wanted to do something. And so while my peers were going and joining established companies like Google and the Microsofts, I went in and I joined an upstart. I was employee number one at a company. It was a small office. It's probably smaller than the room I'm in right now. And that was an incredible ride. And that company today, Zymeworks, is the biggest biotech company in Canada, and it's listed on the New York Stock Exchange. And that was wild. So then it was time for me to do my own thing. One issue with the biotech space is it takes about a decade to get your MVP out. So for those of you who are building minimum viable products, so 10 years is a long time to search for product market fit. So I wanted to move to something faster. My peers were doing stuff in the internet space. You know, they were going through the ideation and go to market and fundraising and acquisition in 18 months or less, and I kind of missed that. So I moved to the data space, which was adjacent to biotech pharmaceuticals. And for the past decade, I've been doing databases. So that's really where I cut my teeth on the technology front. And and then one thing led to another, and here we are with Covalent.
Awesome. So before we dive deep into Covalent, I want to talk a little bit about Saluda, right? Did I pronounce that right? Saluda. So it was in the data space. You started that kind of all by yourself. Was it an idea, or kind of just you were trying to solve something for yourself and it kind of became something a little bit bigger?
So it started as a consulting firm, and the issue, I would say, probably 2013, 2014 era, was a lot of the traditional enterprise workloads were starting to move from on-prem hardware and software to the cloud. And a lot of these enterprises had challenges making that transition. So what we try to do there is help these companies ease up their transition. So we went in and built database technologies and scaled database technologies, and helped bootstrap the cloud practice within these enterprises. So that's really what Saluda was. And it was 100% in the data space, and we even built a product to ease that transition. But we'll go into what happened with Saluda and where it is today. But that's what Saluda was. It was my first taste at entrepreneurship and data. I would say that's the best intermingle. Before that, there was a short stint at a gaming startup. I built a consumer game startup, and I built a restaurant game with cute little avatars. And let's not go into that. That was like a chapter of my life where I was trying to do something and I built a company just for the sake of building a company.
What do you mean? We're not going to spend the hour talking about the Diner Dash clone?
Oh yeah, that's what it was called. It was called Shiny Restaurant. You can probably Google for it and find images.
Maybe I'll go download it later. Yeah, awesome. And then so I see a question here, but I'm just gonna hold on a second because that's a little bit deeper into infrastructure and cloud. And so Saluda was built in Vancouver, right?
Yes.
And then after that, how did that Covalent get started?
Yeah, it was an interesting question. So as a database guy, I've always known about blockchains. Like Bitcoin blockchain was invented uh, 2009, so it's been around for a while. And I've always dismissed it because I only looked at the bust and the boom cycles. But what happened was, this is a true story. This actually happened at launch, and at launch you come across a lot of very interesting people, and one of those guys was Shafin from Victory Square. And so I didn't really have a professional relationship with him, but he was an investor in Victory Square, is a very successful investment firm. And there was one shared washroom with 4 stalls. You remember that back in Gastown. So we were standing out, waiting to use the washroom, and he's like, we don't really, we shared the same office, but we didn't really, engage or anything. And he said, yeah, he's like, what are you up to? And he knew I was in the database world because he used to see those screensavers on my laptop, right? And my desk was the first desk as you entered that private office, and his desk was behind. And so he's like, yeah, there's a database hackathon happening this weekend at launch, and you should check it out. And then I said, I'm not really into blockchain and stuff. And he said, no, it's a database hackathon. It's not really, it's run by a blockchain company, but it's a database hackathon, and I think you should find it interesting. And so I think that weekend it was raining, just like today. It's a rainy, cloudy day. And what am I going to do on the weekend? Let me go check out this hackathon. So I put a team together, and we went to this Bluezell hackathon at Launch Academy. This is exactly 4 years ago. So this would have been October this week, 4 years ago, 2017. And we ended up winning that hackathon. So there I built the initial prototype for what is today Covalent. And so then, yeah, that's the start of Covalent. There was no name. It was just a hackathon. We called ourselves as the Google of blockchain. It lets you access blockchain data without having to download the blockchain. And this crew I put together was very interesting. So I had no blockchain experience, but I had a lot of database experience. I know what the industry requires from a database perspective. But then the other guys knew the blockchain side. So, it was just it was a great combo. And so that's the initial genesis of the idea. We built it at a hackathon over 2 nights, and ended up winning that hackathon. And then there was a pivotal moment. What do we do with this? Do we just enjoy that hackathon, that short-lived thing, or build it into something bigger?
Yeah. So talking about the hackathon and the initial prototype, like what were you trying to achieve? I mean, obviously you were trying to win, but was there any specific goal that you guys were building towards? And has that kind of shifted now, kind of looking back?
So one of the things about the data space is that data has gravity. And no matter what new technology is adopted in the enterprise, there's always going to be a legacy piece of infrastructure that's never going away. There's always a COBOL system and always an Oracle system in your back office that's been chugging along for the last 20, 30 years, going nowhere. So the way these new technologies get adopted is you need to build some kind of middleware or a bridge that connects the new world with the old world. That's always how technology is adopted within the enterprise. So I knew blockchains could be something that would be adopted by enterprises at some point. Lots of unknowns, but this is a technical, hackathon. It's not really a business competition. And so by putting a database layer on top of a blockchain, now what you can do is you can connect the entire database industry, all of your applications like Tableau and Excel and Python and Java, to a blockchain and do your reporting and your compliance. And that's what it enabled. So I was trying to figure out if it was possible to build something like that. And that was the hackathon project that we built. So we basically provided this middleware. So it's almost like a Netflix, where before the streaming Netflix was, you had to go to Blockbuster and get a DVD, and if it's out, then you need to put your name on a wait list, and then you come back home. But today, you have hours and hours of content on Netflix that's available to be streamed. So that's essentially what we had built. We built a streaming technology that you can access data on the blockchain without downloading the blockchain, and you can use it using the existing tools without learning a new paradigm, without learning retraining your people or retooling your software stack. So that's really what we were trying to accomplish from a technical standpoint.
Makes sense. And fast forward to today, how are, I guess, what type of users are using Covalent now, and how are they using it? Just to paint the picture. I mean, some people listening may be familiar with Covalent already. Some aren't really familiar with blockchain at all.
Sure. So blockchains are like databases, and you can use blockchains for whatever you use a database. It's just more secure and it's tamper proof, and it's a shared economy. So some of the use cases that we have is taxation is a pretty big deal. So every blockchain transaction, every crypto trade is a taxable event. So if you want to figure out what your taxable cost basis is, you can use Covalent for that. So we have lots of customers using Covalent for that. Another big use case is a wallet use case. And if you open up any wallet, the first thing that you want to see, let's take the TD or your RBC app. You open it up, it shows you a list of accounts. You have a checkings account, a savings account. And when you double click into one of those accounts, you see a list of transactions and the outstanding balance. So that's exact experience is what we mimic using the Covalent API. So there are hundreds of wallets out there that are today using Covalent for their crypto wallet experience. So that's another big use case. The third big use case is investor dashboards. So you have a list of assets, you want to figure out what's performing, what's not performing, what is the growth rates, all kinds of due diligence work that you want to do. Basically measure entire GDPs of economies down from the country level to the provincial level to the city level to the municipality level. So you're able to get that level of granularity that you can do with the Covalent API. So these are primarily our use cases. But of course, there's also a long tail of use cases that we didn't even plan for because the API is so flexible. So we have a social copy trading application. We have an enterprise payroll software company. We have a pretty major, like Fortune 50 enterprise company building NFTs and invoices. All kinds of use cases. It's just very flexible. We like to think of it as a can of tomato sauce and some pasta, and whether you make lasagna or something else is up to the developer.
We've come a long way from describing blockchain as a cake. I still remember 2017. Yeah. Everybody's like, blockchain is like a cake. And I was like, I have no idea what you're talking about. Cool. That's awesome. So one last question about kind of like the early days. And then I want to move over because some of the people are asking questions about, building an infrastructure and stuff like that. Because Soloida wasn't brand new. It had customers, it had, users and things like that. And at the same time, this thing kind of came out of a hackathon. You're like, oh, well, maybe we should try and build something out of it. Can you describe the shift a little bit from like, okay, this was like a pet project. Now it's got legs. Now it's something that I got to focus on. And maybe my original product even takes a backseat. Like, what was that process like, and what ultimately kind of pushed you over to be like, no, this has to be like my primary thing, and this moves to secondary?
Yeah. So, but I distinctly remember that week I took to deliberate over that decision, and it wasn't a light decision because Soloida had some brand awareness. We had a top performing blog, and we had a lot of leads and lots of stuff. Lot of stuff is going well. But my goal has always been to build a fast growing startup, and something that wasn't fast growing wasn't really that interesting to me. It just in terms of impact, in terms of the best use of my time. So one of the, I would say, mistakes that I made with Soloida is that when the opportunity was there in maybe 2014, 2015, where I should have gone out and raised venture capital or some kind of seed capital and gone and exploited the window of opportunity, I kind of missed that. And so what happened by 2016, 2017 is a lot of the industry peers had become a lot more mature, so it become more competitive in terms of finding that entry point, finding that beachhead before you're able to get traction. So I was starting to feel that 2017, it by all means was our biggest revenue year. By all means, our traction and everything was going up and to the right. But it wasn't seeing that explosive growth. And I knew just from my understanding of the market that window had closed. Our closest competitors had all raised, $20-30 million, right? They'd gone through 2 funding rounds. And I knew that as an upstart, you're just late to the game. And that's just a killer for any kind of startup. And so, I had to make a choice whether to stick around with this, and then it'll be more like a lifestyle business. It'll be, be very comfortable, but it's not the outsized impact that I was going for. As opposed to something like Covalent, what is today Covalent, where you start something from scratch and you don't have any of the legacy bits. But everything that I've learned from Salota, everything I've learned is exactly what I've rolled into a new product and new market offering, right? So it was a question about being first to the market with a new product, as opposed to being a laggard in a well-established and a more mature market. So there are pros and cons to either decision. The problem with starting from scratch is that you start from scratch. You have literally no infrastructure. You have nothing. You don't even have a name. You don't have a website. You don't have a thesis. You don't have your positioning. You don't know who your customer is. You don't have product market fit. You don't even have a product. In fact, in our case, we didn't even have a market. So I think that's where it becomes quite challenging. But ultimately, I decided to do Covalent and phase down Salota.
Yeah, for sure. And I think you brought up a really interesting point there that I think not enough founders talk about in terms of fundraising, because I meet a lot of startups, obviously, in my time. And some kind of labeled themselves early, like I'm a bootstrap company, or I plan on raising in 3 months, or I'm already at seed stage, or whatever it is. Like they've already had that kind of path like locked in their mind. But I think in your case, you guys started out at a bootstrap company. It would have probably been ideal for you to look at what was going on in the market and react. Right. And so like, I think that's something that maybe some founders don't always keep in mind, because they might have wanted to set things one way, but we have to pay attention to the macro picture as well. We'll come back to the fundraising bit and kind of talk about Covalent's fundraising journey a little bit, but there's a couple of questions here about the product of Covalent. And so the first one's pretty specific. It's from Aleem, and so obviously Aleem is looking into understanding how to scale his workforce globally. He, I believe, has a team in I think in the Middle East or in India, or I don't know. Liam, you might want to correct me. But he's looking at trying to shift hosting his infrastructure and cloud to Vancouver. I don't know if you've ran through the specific scenario he has in terms of shifting the base location from India to Canada, but from your perspective, like you're based in Vancouver, Canada right now. What kind of benefits from perhaps a tax perspective, or perhaps from a technology perspective, is it having your home base hosted in Vancouver?
I don't think there are any specific advantages, right? So I think if you want to win in the market, there's not a lot of advantages. I think there are tax credits. There's other kinds of benefits to being a Canadian company. Also, if you want to build your staffing here in Canada, it's nice to have a Canadian company and have them as employees. We all know as entrepreneurs, if you go to a bank and you say you work for a startup, you're not eligible for the traditional financial system. Your mortgages and all that is just going to be extremely painful. So to just give you that peace of mind, I'm an employee of a Canadian company that does data analytics, right? So it's very simple to someone from the outside looking in. So I think that's the benefit. There are tax grants and there's like shred credits and IRAP, but those things are not those are not going to make or break your startup, right? Those are nice to have. But if your infrastructure is in India, it really depends on what kind of market you're targeting. So if it's something on the edges, like a crypto startup, you probably don't want to have crypto infrastructure in India. So we have staff in India. They're all employees of a Singapore company, for example, right? So that's how you want to set up. But at the end of the day, it doesn't really matter. Some people go down the Stripe Atlas route, and that sets you up with a Delaware C Corp. So it's great for raising money from institutional investors down in the States, or even angel investors, because they can have tax write-offs. But it doesn't really matter at the end of the day, to be honest. Like, the game, that's not how you're going to win the game.
Cool. All right, Liam, hopefully that answered your question. Another question here is specific about the I guess we can call it the blockchain stigma. And And Robbie here is asking, like, lots of top level seniors in big companies don't know much about blockchain. They think that blockchain is equivalent to Bitcoin. It sounds like a scam. I'm sure you've heard this S word more than a dozen times. How have you been able to overcome this problem for let's say non-tech or non-crypto people, especially in adopting your products?
Well, for me, it's very simple. Just ignore them, right? They don't matter to your success. And you can wait around for them to come around. There'll always be new use cases in whatever industry vertical you're targeting. So the guys who called, I was one of them, right? In 2015, 2016, I looked at blockchain tech and I thought this was a joke because I was comfortable from a technical perspective. I was comfortable with 10,000 transactions per second, while something like Ethereum can only do 15 transactions per second. I thought, okay, this is a joke because I didn't really understand the ethos of decentralization. So these guys will eventually come around, but today it's different. In 2021, and as we enter 2022, the Web3 movement is here. Blockchains are here to stay. It's not going back. The amount of talent that is entering this space is immense. Every single company is looking at as a blockchain as an opportunity, as a backend. There are real use cases, there are real economies, there's real transactions that's happening. All of the illicit behavior that you heard from like back from 2016, 2017, they've all been cleaned out of the system, which is great. We had this multi-year bear market because we sold ourselves ahead of what the traction and the technology could support. But today, I'm not too concerned. We have Fortune 50 companies as customers, and we're definitely not mainstream by any means. But I think the early majority is here. If you're familiar with Christensen's crossing the chasm analogy, so the early majority is definitely here. At the end of the day, I think people fear things they don't understand. So tools like Covalent help bring visibility to what's going on the blockchain, and they can find out that it's not all like illicit behavior, right? There's actual real stuff going on here, and yeah, it's just a matter of time. People called the internet a scam. People called Amazon a scam. You can go back to 25 years ago, and they said, will this company ever survive, right? Is internet just a fad, or so these things happen, and you can see the same thing with weed, right? So it's not even technology. So weed has always had its stigma, but I wouldn't be too surprised in the next 5-10 years, just like how you bring a nice bottle of wine to a dinner, you bring in a joint to a dinner. Why not? I think it's just around the corner, to be honest.
Mm-hmm. That's amazing. And I want to go back to what you just said. Like you mentioned that there was like a bear market. I want to say it was 2018, but honestly, dates are a little bit blurry now. When it was like, it felt like it was down in the dumps. How did you, as the founder of Covalent, kind of weather that storm? Like, what kind of gave you the conviction to keep going?
Sure. So I can give you a lot of advice on marketing and sales and fundraising and recruitment, but don't take my advice on market timing. I have the worst credibility amongst all of us. So when we started in 2017, little did we know that we are going to be entering a multi-year bear market. So this was 2018, 2019. So we were bootstrapped for the entire year of that time. So for the first 2.5 years, we were bootstrapped, not because we wanted to be a bootstrap company. It's just that nobody was writing checks. The market was dead. There's now no market. So we had no choice but to bootstrap Covalent. And so I knew this was a thing, right? I just know from technology cycles that this is bound to happen. It's inevitable. And technologies like Covalent will be part of that growth story if it were to ever come back. So we just kept trucking along. At the end of the day, it was actually pretty fun to build Covalent. It was just the two of us. It was Levi, my co-founder, and myself. And we just came in day after day after day, just building tech. And there was no market, no customers, no revenue. But we just kept, just coding and coding and coding and coding, refining. And we did that day after day for 2.5 years straight. Yeah, was it difficult? Yeah, it was pretty difficult. It was. I actually lost a bit of belief in Covalent towards the end of 2018 because we had spent a year at Covalent and nothing was going on. And that's when I took a small break to go climb Mount Everest, the base camp, and did that whole thing to like really reflect on what's going on. And then I came back and, I realized some things, and we just kept going. So I think I knew this was inevitable, right? And we didn't care too much about the macroeconomic conditions. Probably because I've had a couple of exits in the past, and financially I was okay, and I was able to float the whole thing. But from a opportunity cost perspective, yeah, it's not rational. I don't think I have it in me to do this again in my life, to be honest. Just I don't know why we did it, but we had a conviction and we just kept trucking along, which
Yeah.
is so great to look back, because in March 2020, there was during the lockdown, there's a correction in the stock market. Bitcoin dropped by 40% in one day. We had a term sheet for a fundraise that disappeared. It evaporated overnight. They went radio silent, so everything was just collapsing. And then for some reason, I'm really able to focus in moments of crisis. And I said, okay, this is what I need to do. This is what I need to do, like A, B, C, D. And we executed that plan exactly to the dot. And here we are. So bottom line, I don't know, to be honest. It was just a lot of fun. And I knew this was a thing, and I was willing to wait it out.
That's amazing. And ironically, we're filming this on the day where Bitcoin's at an all-time high. So, everything's cyclical.
Exactly. So I was actually telling my team, so Covalent, the token has done really well. So if people are so jubilant on the way up, are you going to get depressed on the way down, right? So, you can't let your emotion, like the market is fickle. At the end of the day, you want to see what is real, what is substantial, and continue building if you have a long-term vision.
Yeah. So that's a good transition, I think, for us. A bunch of the questions that I have on my board are related to fundraising and tokens, and I have a couple questions on DAO as well. So I want to kind of start back a little bit. From working with Victory Square, I think you guys first raised an early round with them. I don't know exactly the timeline, so maybe you could walk us through that. But then also you went to raising 2 subsequent rounds, and then just to kind of release everything out into the open, sometime I think it was late last year or early this year, you guys also released a CQT token. And then I think just last month, you guys announced an Alchemist DAO. That's a lot of buzzwords, especially for people who are listening in and maybe not familiar with blockchain. But maybe just walk us through the finances. Maybe spend 2 minutes just talking about from your early raise with Victory Square and how we get to today where we have a token, we have a DAO, and also we've fundraised, I guess, in a more traditional way as well.
Yeah, great question. So when you think about a startup, not really a side project, but a startup, you need to have 3 roadmaps. You need to have a biz dev roadmap, you need to have a product roadmap, and you have to have a fundraising roadmap, because startups take a lot of upfront capital before you're able to see revenues. It's not like a car washing or a laundromat or a service business where you can see cash flow from day one. So you need to plan this out, and you need to make sure there's enough fuel in the tank before you're able to reach your next destination or your next milestone. So that initial round was not really a round; it's a friends and family kind of support. So because I had known Victory Square and Shafin for almost 2 years by then, and he was the guy who pushed me, nudged me along the blockchain thing. He gave me that that insight that go check it out. It may be something that you're interested in because you're a database guy. It made sense for to bring him on board as a founder. So Victory Square is actually a founder of Covalent. So they were there from day one, even before day one. So that's where that initial, working capital came from. But that wasn't a lot of money. And the idea was that we go out there, build a minimum viable product, and then go raise an actual round to build the staff. That funding was only enough for the initial founding team. And that quickly ran out. So 2018, 2019 was bootstrapped. Like I said, it was not because we didn't want to raise money. It's because we could not raise money. We were just not attractive to investors, and there was no market, no traction, no revenue, nothing. And in 2019, what had happened is we started to see early traction. So people are starting to, explore covalent, starting to, do some interesting stuff. And then early 2020, what happened is the market started to, show life, show some signs of life, right? It was like just like a little bacteria in your pre-life earth, whatever analogy you want to think about. And then the market was starting to revive, things were happening. So that's when we decided to go raise a round, and we put something together, and there was a term sheet. And then the crisis hit, and when the financial crisis hit, and COVID lockdowns and just a lot of uncertainty, that opportunity disappeared. So then it was time to make it profitable. And by then, the market was enough to make it profitable for a team of like 4 or 5 people, right? So it was enough. I knew how to go do sales and acquire customers. So my first main plan of attack was to make the company profitable, because I'd been floating the company for more than a year out of personal funds, and I was like, my wife was like starting to question like what's happening here. Where's all the savings, and what do we have in store for our plans and all that stuff. So there was a bit of a difficult discussion there at home. But once I made Covalent profitable, suddenly there was a huge weight taken off my shoulder. And like now I'm not floating the company, I'm not bleeding cash, and it's just this thing on its own. And we had closed the biggest company in the space, Consensus. Because what happened when COVID hit is that the sales landscape or the competitive landscape kind of flattened out, right? And so we were able to close these big customers in New York and London from our town in Vancouver, because nobody knew what was behind that Zoom screen, and nobody cared, right? It was just purely on the merit of your technology and your sales fit. So I used to wake up at 3 a.m., 4 a.m., just because I was so hungry to close these sales, and we made Covalent profitable. And once we became profitable, suddenly, a lot of doors opened to us, right? And so then we did 1 round, 2 rounds. We actually did 5 rounds in the last year, 15 months. So we've been very, very busy. So basically what we did is once we hit profitability, once we hit product market fit, the timing was great. The market was hot. All we did is went out, raised capital, deployed that 100% into our product, into our team, built out our momentum and our traction, went out and raised another round, put it back into the growth, went out, raised another round. And then each time we would upgrade our investor base. So first set of investors were like angels and friends. Then we brought in institutional investors, and then we brought in Coinbase and Binance and FTX. So these are the top 3 exchanges are investors in Covalent. Then we brought in Hashed, who is funded by the Sovereign Wealth Fund of South Korea. And we just kept doing that again and again and again. So in the last 15 months, we've grown we were literally just 3 people in September of 2020. And today we're about 40 people, right? So the growth has been incredible. We just had 5 customers in September 2020. Today we have 400 customers. We only indexed 1 blockchain, 1 enterprise, customer last year. Now we have over 15. So everything, like that's basically what we've done, right? We just hustled our way through on a growth trajectory. So I think when people see that momentum, they feel the momentum and they want to be part of this, and it's on the upswing. So fundraising becomes easier. So we can go into the specifics of the fundraising, the tactics, and the strategy, and it all comes down to what do you want to achieve. We can go into that if you have time, if there's interest from the audience, or we can move on to another topic.
Definitely. So yeah, if you guys have specific fundraising questions, feel free to pump them in. It seems like the interest right now that I have on the board is kind of comparing like DAOs, and I'm going to spit out a bunch of acronyms here. So it's DAOs, IDOs, ICOs, STOs. How do those compare against traditional raises and the structure that, like, what's kind of like the pros and cons, I guess, for a company that's looking into it today?
So if you want to be legally compliant, there's no difference, right? It's all exactly the same. They're just different instruments. It's just like the difference between an equity raise and a debt raise. There are pros and cons to each method. So I would say if you do tokens or you do debt or you do equity raises, they're all meant to achieve something. So you have to be very clear on what you're trying to accomplish. So if you're doing an equity raise, the equity investors are looking for some kind of M&A or some kind of acquisition at the end, either through uh, uh, public market exit or something of that nature. If you're doing a debt financing, then it comes with a whole set of gotchas, right? So nothing is free. If you're doing a token raise, again, the regulatory framework is extremely complex. Navigating that is pretty challenging. There's a lot of help now, but last summer we had to figure all of this out from scratch. And I think we are probably one of the first 4 or 5 companies in Canada to do this kind of like token raise. Everyone discouraged me. Well, we did it. So here we are. So I think the pros and cons to every single strategy. You just have to be very clear upfront on what your goals are.
Yeah. And one of the questions specifically about the token was, is there any requirement or regulation in Canada, I guess, to issue a token like CQT? I think the answer is yes, but I think maybe this is something that Alex, the person who's asking the question, is looking into specifically. So like, what are some kind of maybe starter tips to look out for and look into?
So what we have done is we've set up an offshore entity. And the entire purpose of that offshore entity is to issue these tokens. And once it's sufficiently decentralized, once the tokens have been distributed, you dissolve that entity. So you can set this up in Puerto Rico, in Cayman Islands, in British Virgin Islands, and Singapore. So these are all very friendly to this kind of setup. So you definitely need to get legal counsel. None of this is legal advice by any means. That's the setup that you do. And then you set up a transfer pricing and an IP licensing agreement between the Canadian entity and the offshore entity. So you do the fundraisers outside of Canada, and then you have a very clear contract where the intellectual property is built in Canada, but is transferred over for a service contract. So that's how we've set it up. And that's one way to do it. There are multiple ways to do it for sure. But that's the route that we've taken.
Awesome. Hope that helps you out, Alex. Another question was more related to the DAOs. I guess for context, what is a DAO first of all? And like, should companies be looking more into creating DAOs as again generality?
Sure. So one of the beautiful things about these crypto economies is that the token is a shared ownership. So in the case of Airbnb, for example, they're equity holders and then they're actual users of Airbnb. This could be the travelers or the hosts, right? Those are the guys who are using it. But those guys don't actually have any equity, right? They don't see the upside, the financial upside of Airbnb, the network itself growing up. So that's different from a DAO. So in the case of Covalent, the company doesn't own anything. Like I personally don't own like the Covalent network. It belongs to token holders. Yes, I am a token holder, but I have the exact same rights as any other token holder. And so it's this network economy, which we have currently 25,000 people who own Covalent collectively, right? And so we all make decisions collectively. And I'm not above anyone else on the network side. So that's what a DAO is. A DAO stands for decentralized autonomous organization. So basically, there are no rules. You can come in and you can participate in a vote, for example, just like a governance vote, and you can spearhead and change the parameters of our technology. And then if there were any kind of value accrual mechanism to the token, that would go directly to the token holders and not to the company. The company just happens to be the initial Genesis team that's building the product, but the Canadian company has no tokens. It has nothing. There's no connection between the two. We just happen to have that service contracts where the DAO is contracting the Canadian company to build out the technology in exchange for value, right? But the Canadian company itself has no tokens. There's no exposure there. So it's very clear from a standpoint. But what is happening in the next couple of months, next couple of years, is as the network is up and running, the P&L, the profit and loss statement for the DAO is very distinct from the company, and there'll be multiple setups across the world who are contributing to this DAO, just like the Canadian company is. So that's the goal there. So there's no single point of failure. You can shut down the Canadian company, no big deal. The DAO is still autonomous. You can shut down the Singapore entity, maybe the South Africa entity, maybe the Berlin entity. It's not a showstopper at all.
Gotcha. And then so for I'm using the word traditional startups, but it feels very off the tongue. But what can they kind of learn from this DAO process, or help to understand it better? Because it does sound like, and you seem to believe in this, like more corporations, more startups are going to shift to this type of model, right? Because with Web2, we, like, when we talk about things like Facebook, like one of our biggest complaints is like, well, they're controlling how we consume our data and what we want to see and things like that. And that's not okay anymore. Right. And as you kind of mentioned, having a DAO model kind of not shifts responsibility, but the people have more control. Your users have more control. Right. I think at the end of the day, that's the goal. So how can traditional startups or non-blockchain startups today kind of look at that and go, hey, this is something I need to learn from. This is something I need to pay attention to.
Yeah. So if a co-op model works or makes sense in your vertical, then I think taking a look at DAO makes sense. So I think that's where it comes in. But if you're a traditional, like a restaurant serving food, for example, having a DAO there doesn't really make a lot of sense unless the patrons who are coming to the restaurant want ownership stake on what is being served as food. If that's like a collective agreement, then it makes sense. So I think that's where it makes sense. Having a DAO just for the sake of having a DAO is not like, at least I'm not bought into that idea, right? It has to be a specific purpose. I can go into the Alchemist DAO and why we built that.
Yeah, for sure.
So one of the things, so we have like a very structured growth plan at Covalent. So we have like product engineering, we have like the recruitment side for talent, we have customer acquisition, we have customer retention, and the final pillar, the fifth pillar, is community. Because people can steal our technology, people can probably hire our staff away, but they can never steal our community. Our community is who we are. And if you look at the big products out there, they have this rabid fan base. Like if you look at Apple, or look at those sneakers behind Sam's desk, right? So there is a lot of excitement there. So we wanted to build something like that for Covalent. And so what we did was, earlier this year, we for the DAO, we allocated 1% of our entire supply to fund a community program. So we designed the Alchemist program as a learning and development program, and there were like multiple seasons. So every season you have to go through like a questionnaire, and you have to do these tasks, and you have to show and demonstrate that you're growing with Covalent, right? And we airdropped the Covalent token CQT to fund this program and as a reward. And that Alchemist program, we ran that completely internally because we were bootstrapping it from day one. We started from like one user. I think we have 2,500 users or alchemists after 5 seasons. So it was a very structured program. And some of your members know Jackie. Jackie Kim Perez was at launch for a very long time. She was actually working at Victory Square, and she joined Covalent earlier this year to run the Alchemist program. And so what's beautiful about this is that we funded this, yes, and that 1% is now about $15 million, right? So all these guys who came in and volunteered, that airdrop is now worth a lot of money. And in many cases, it's actually more than their yearly comp that they also learned out of this. So that is quite magical in terms of what has happened there. And now there are meetups. Now there's like a lot of stuff going on. But we funded that program, right? And what should happen is this should be completely standalone. It should be self-funded. It should reach profitability. It's just like another company. The P&L has to be sustainable at some point. Doesn't make sense to for us to fund it. So that's why the DAO structure. So now the programs, the P&L, the, what how you structure this, how do you do recruitment, what kind of campaigns you can launch, is actually run by the DAO members. It's run by the alchemists. So we've elevated the top performing alchemists to be guild leaders. So we have, I think, 6 to 7 different guilds: esports guild, mental health guild, learning and education guild, developer guild. I think there's a research guild, and those guys, they hold the strings to the purse, and they manage the P&L, and they do the biz dev, and they do everything autonomously. It's completely away from what Covalent is doing. So it's pretty emergent in that sense. And some of these guilds, it's pretty crazy. Like they did a sequel webinar last week, and 125 people showed up to that webinar, right? And so now it's its own thing, has a life of its own, and it's, again, completely decentralized. So the people who are part of the guild, you only need one CPT to be a member of this guild, and they manage the P&L. They step up to become leaders, and they figure out how to make it profitable. So they're almost entrepreneurs in that sense. So it's given a lot of access, a lot of opportunity to people, and they don't have to apply for a job. Literally, they go buy one CPT. I think it's less than $2 today, and they go to Discord and join the channel, and then go participate. Roll up the sleeves and go do work in exchange for bounties. So it's very distinct from Covalent. So that's the journey that the Alchemist program has gone over, and now they're getting bounties. So we got a $50,000 grant from another project because they want to use the Alchemist to build some interesting tools. So that's revenue for the guild. That's not revenue for Covalent, right? So the distinction is quite distinct there. So that's pretty amazing to see what has emerged from the initial Alchemist 1.0 program. So that's what's happening there.
Mm-hmm. Was there like a mental shift that you kind of had to force yourself as a founder? Because I think the founder, their instinct is like, well, I build, customers buy, right? And to some sense, you have control over what you build, right? Obviously, there's a feedback loop and things like that. But now we're going where it sounds like these are ecosystems and communities that you've created through your different lines of product, and those are, I mean, obviously there's still staff involved, like Jackie does a big part of that, but they are self-sustaining, and they're growing and learning and becoming their own things. And it sounds like soon, if not even now, they're going to be projects that you barely know about, right? But they're self-sustaining and they're learning. Like, was that like a weird shift for you as a founder? Because like that's probably not what most founders are used to.
Yeah, so it comes down to scale, right? So if you think about even equity, there's a very clear analogy. Equity is like manure, where if you distribute it, you have a beautiful flower bed, but if you keep it to yourself, it's a shit, right? So that's a really neat analogy. So it's the same thing with the tokens, right? So by having distribution, by distributing it to everyone rather than keeping everything to yourself, a lot more flowers can bloom. It's a lot more beautiful. And so if you're okay with that, which I am okay with it, I think even though my personal stake keeps decreasing, the net value of that smaller and smaller shrinking slices of pie becomes that much more richer. So that's the mindset that I'm coming in from.
Mm-hmm. That makes a lot of sense. Awesome. Just kind of closing in on things here. We have a couple questions kind of about the industry in general in terms of Web3. One of the first ones was like, I guess, what spaces do you see kind of Web3 disrupting, for lack of a better term, next? And there's a very specific one about like, how can blockchain disrupt the insurance industry?
Yeah, so it's fascinating to see what's happening. There are existing businesses that can be disrupted. So like the banking and the financial sectors, I think they're going to be disrupted because cost of transactions there, it's pretty amazing to see how efficient these blockchain systems are. When it comes to insurance, I think this co-op model is very, very interesting, right? So just like how we have joint stock corporations, if you look at most insurance products today, they're underwritten by a for-profit corporation. But what the insurance model that were historically being built were mutual insurance companies. So the mutual insurance, the co-op for insurance and the underwriters is a perfect fit for blockchains because you can have a token and the token is shared by the members of the insurance co-op and they're underwriting themselves. So there's Nexus Mutual is an example of a blockchain-based insurance product that is very interesting and innovative when it comes to insurance. I would say in the next 5 years, pretty much every single consumer fintech application will be repositioning themselves to support digital assets and crypto. So yeah, but market timing has never been my strong suit. So take that with a grain of salt.
That's fair. And definitely I think a big part of it is how fast or slow governments move as well, right? What are your kind of thoughts on obviously, like we've talked about Covalent itself, like all the different spaces that they are even just incorporated in. Is it difficult working with like government and talking about things like taxes and regulations and stuff like that? And each time you're entering a new country or you have, I don't know if it's customers or team members in new countries, is it like another new set of rules to learn, or what's your experience been with that?
So a lot of this is just gray area. So there are no rules, right? And as long as you're not doing something blatantly illegal, like you're selling a security or you're funding illicit behavior, you hope for the best and prepare for the worst. That's all I can say, because a lot of this stuff is just very, very gray area. We are doing proof of concepts with traditional enterprises. Central bank digital currencies is a hot thing. So that's going to come on the horizon in the next 5 years. So we have, early stakes in a lot of these projects, but today, it's just very cloudy in terms of what the roadmaps are. Everyone is skeptical. Everyone is a little afraid. So, you just have to make sure you don't have any downside exposure, at least at our scale at Covalent, where there's a lot going on. I think the impetus is on us to decentralize ASAP so that there's no single point of failure. You can come to a single node and take the entire project out. And yeah, so that's what we've been working on.
Awesome. And just so for live listeners, we just have a couple minutes left. If you have any last minute questions, feel free to fire them my way and I'll try and kind of squeak it in. But just kind of rounding things off, like you mentioned, you've worked out of launch in the very early years, a whole bunch. I've known you for a long time. I've seen you grow as a person, as an entrepreneur. You scaled Mount Everest, or at least base camp, right?
Base camp, yep.
What would kind of be advice that you would give to you starting out earlier on, like as a younger entrepreneur?
I would say don't ignore the macroeconomic conditions, right? You can take product risk, you can take team risk, you can take financing risk, but don't take market risk, honestly. It's just not worth that. I should say that the reason Covalent is successful is because of market risk. So, the upside is huge. But I would say taking market risk is, see, as an entrepreneur, you got to take calculated risks, and market risk is not something that you should take, because what would happen is that if there's no market, you're building the wrong thing. You're not getting feedback from market. You're not able to get that momentum running. You are not able to, to build any kind of like flywheel, right? Nothing is happening. Everything is at a standstill. Like the first 2 years, first 2.5 years at Covalent, there's nothing going on. It was just like completely, I think it's honestly a waste of time, right? Because we were building stuff that, half the stuff we threw out because it was not even relevant when the market actually picked up. Things that we had that would be cool are just waste of time. So, if we had the market that we have today, we could have built Covalent in half the time, I would say, because we would not have wasted, other things. The only thing that's good, was on our side and is on our side, is that the tech is extremely difficult to build. So even though we have about 15 competitors that popped up after our fundraising last fall, none of those guys have been able to keep up, because the tech itself takes like 18 months to 2 years of dedicated, focused effort to get it out of the door. So if you look at the market today, there are two big players, and both players started in 2017, 2018 era. So they lived through that multi-year bear market where you can just be heads down focused, right, without distractions. But in bigger markets, don't take market risk. It's not worth it.
Perfect. And appreciate you as always being so honest and transparent with everybody here. Last question from me is just, if people want to chat shop, if they want to talk Web3, they want to talk about DAOs, they want to talk about tokens, how should they reach out to you?
You can email me, Ganesh at covalenthq.com, GANESH at covalenthq.com. Another option is to go to my Calendly and then just directly book something like a half an hour chat. I'm always down to help people. If you want to learn about biz dev, if you're looking for a job in the space, hit me up. If you're a new entrepreneur, and if I like your idea, I also write angel checks. I also have a VC fund that writes checks, bigger checks. So I'm a partner at another fund. Yeah, I think there should be more entrepreneurs, more successful entrepreneurs, and I can share all of the mistakes I've made so that you don't make them.
Perfect. Thank you so much for your time, Ganesh. And we'll definitely chat again soon. Try and get you more involved with the community here as well, as much as your time allows. And yeah, so that wraps up our episode. Stay tuned for more, and thank you very much, everybody. Have a good day.
Thanks, Sam.
No problem.
Really enjoyed this. Take care.
Yeah, for sure.
Bye.
Bye.